Good morning, everybody. This is Mark. We're back here for the morning call. It is Friday. So, definitely a difficult week from the bull front. From a bear front, you got rewarded for the first time in a while from, in various different stocks. And that's sort of where we're at right now. The tug of war is in place. We start earnings, the thick of earnings next week. We obviously had some earnings this morning. We had Wells Fargo. Missed a little bit. JP Morgan from a banking side, beat a little bit. JP Morgan right about unch when I came in here. Wells Fargo down a little bit. The banks seem like they're one of the strongest sectors out there, so we'll have to wait and see how they hold up. If they cannot hold up, you're going to get more selling across the board. And, I think this is one of the sectors that actually is keeping us up there. Goldman Sachs seems like best in breed chart-wise. So look, touched a new high not yearly high, but touched a new high yesterday and then came back down. We'll have to wait and see how it holds up. Looking at run 120 as a possible reentry. And if it can't hold up, possibly, a shorting opportunity in the cards. We'll have to wait and see how this market plays out. I think that's the key. Waiting to see how this market plays out. Sometimes there's definitive action to the long side. Sometimes there's really definitive action to the short side. 4 or 5 days down, getting to oversold. The definitive action a little bit more difficult. We had obviously yesterday at that gap up, ended up being a very good sell after the gap up, after the first 2.5 hours of the day. Everything came in. Apple showed real weakness early on, continued late. Nice $15 turnaround for those that were short. And to me, you got to look at the weekly chart, and you're seeing the 50-day. I think it's the 50-day on the weekly is right around. That's the monthly. Sorry. Right around here, 21 days, right around here, 625. And I think 620 is the next level. And then you see what I see. It can get back down to 600, even lower, depending. We'll have to wait and see. It's a momentum stock, so when the momentum shifts, which it obviously has, you got to be aware, understanding that still might be fundamentally the best in breed. Respect the intraday action that's happening. Respect the cash flow that you can make. Whether it's being to the long or currently right now to the short side, and trade accordingly. Right now, it doesn't seem like it's ready to bounce. I said the other day after that rally, didn't feel like the bottom was in, didn't know how it was going to play out, but obviously certainly the bottom wasn't in after yesterday's action. So we'll have to wait and see. We're gapped up a little bit this morning in Apple, gapped up a little bit in Google, but that's still hanging in there. The same token, though, if the market really wants to take a break, this might do it after earnings, maybe before earnings. I don't know. It's still holding in there, so it's still a best-in-breed stock. But then you have a few others. Amazon penetrated through key moving averages, and from 260, it's almost 240, a 20-point haircut. Is it a time to short? Probably not necessarily from a swing perspective, but I think there's going to be trades in there. 240 will be an opportunity, personally for me, to probably take advantage of, a buying opportunity, but because I feel like I did miss a little bit of the short. Look at 238 also as a 21-day, just so you have a line of reference. At least initially, it should hold there on the weekly. Sectors that worked yesterday, you had some of the commodity sectors. WellPoint, I see this X keep grinding up a little bit slowly. Schlumberger had an okay day. We don't have I go through my charts every day. I don't see a lot that I'm really, gung-ho about and ready to lean into. It seems like much more of the high beta, the money is coming out of there. Priceline is one of them. Some of the stuff that really just has, quite frankly, taken off tremendously. And, we're now in that range where, the second they sniff a little weakness, the bears start to jump on it, which hasn't happened in a while, which means the change in complexion, which we've been talking about now for about 2.5, 3 weeks, is in place, and it means it's much more of a scalp market, both directions currently for me, and we'll go from there. So this morning, I'm certainly going to look at JP Morgan. I'm certainly going to look at Wells Fargo and Goldman Sachs alike. Apple, 628 will be my first level. For the buying opportunities, for feeling like it's a little bit aggressive, 625 would be the next level. That will be what I'm looking at. If it gaps up $3-4, It will only be cash flow for me at this point in time, and maybe there will be an opportunity for it to roll over. We'll have to see. That seems to have played itself out over the last few days. Whether that's going to be the game plan today, I'm not so sure. And that's it. You know, the one industry I talk about, you know, you got to look on pullbacks. Well, we're starting to get it. The home builders, you know, you got Len just pulled back to its 21-day hanging there. But like I said, I don't love it. Touches 21-day and then came back a week later. Not the best signal for me, especially when you start to get some weakness in the overall market. People locking in possible gains across the board. The home builders obviously have been up a tremendous amount for the year. So we'll have to wait and see. I did the same concept with Toll Brothers, which is right at its 50-day, right around 33. Everything that I'm doing at this point in time from the long side or the short side is tight stops, and make sure you have a game plan in place to act accordingly. I'm not thinking a whole lot. I think the S&Ps right now on the weekly are probably going to close with a nice little bearish channel, or on the daily we'll close with a bearish channel, but on the weekly you can see it's still holding at this point currently above the 8-day moving average, which is around 143. So is that going to change? We'll have to wait and see. But then you have the Qs, which have already touched its 21 days. So you got a stronger sector in the S&Ps. The Qs, obviously with Apple, Priceline, Amazon, certainly Google in the mix. Definitely it seems like a weaker index. And then let's look at the IWMs, the Russell 2000. That I would say leaning more towards the S&Ps. Still hasn't really penetrated the 8-day on the weeklies, so which is again something I like to see, but it has come in and it's trading a little bit below on the dailies, which I have right now. So we have cross currents going on. I think IBD put us back in a correction mode, which sometimes, you know, is that day, and then you need that bounce, and then we get it next week. We get some more selling, but we do have earnings season next week, and I think best in breed will certainly float to the top. And on the other side, you're going to see some real volatility if things start to miss. Good luck today, and I'll talk to you later.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.